All right, let's do this. Walmart Inc., WMT, and that is most likely on the New York Stock Exchange. We have a winner, yay! Sector, consumer, non-cyclicals, industry, food, retail, distribution. And let's start it off, guys, with the monthly candle charts. See where that overall trend's happening. 12-month average still going upwards, but a lot of violations, giving some signals. If you would zoom in on the weekly, which we're going to do right after that to do some Stan Weinstein stage analysis, we're going to see that we probably had a stage 4 here, stage 4 scare, and but it seems to go back up. Look at those previous highs. So we had highs back in January 2018, and then just one crazy candle down and trying to go back up again, but the tweezer, the wick stopping there. And then during this month we had some price action above, only to get brought down below the open and starting to close down. So that's not super duper. You don't want to see lower highs. You want to see higher highs. And for me, that for sure, I know the month of September is not over yet, but these are lower lows. Then it's a question of seeing if we're going to have, this is my monthly defined support. It's going to see if we're going to have lower lows below those levels here, below the 82 level, previous low. But right now, we're still going upwards. We're above the 12-month moving average. This I don't like. Let's go see the weekly, guys. Let's go get some details there, because right now the monthly is not giving me, it's giving me mixed signals, guys. Top, down, 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 down. Stage 3. Stage 4 right here, but remember, you want to be below the Ichimoku cloud. So it's very tempting here to play that stage 4 right here. Increasing red candle volume. Mansfield relative strength compared to the SPX. You're starting to underperform it. The 30 moving average starting to decline right here. The price action is below. And they say, oh man, stage 4, let's go to short. But thanks to Isa Trader on stageanalysis.net, he uses the Ichimoku cloud to get that, to define that close overhead or underhead support that Stan talks about, that nearby support. So you always want to make sure that you had a clear way going down, and if there was close support, then you'd better be through it and not risk it. And man, this is like, look at that. Look at the price action after that, just hogging that monthly, that Ichimoku cloud defined support. And after that, you're just back in, guys. As soon as the price action starts to close within, back below the breakdown line, and then it closes above, then you know that stage 4 has failed. Wasn't meant to be. Right here. Here you're out. So what do you have now? Stage 4 failed. Back into stage 1, and now it's even trying a stage 2, guys. So it just quickly reversed, man. What looks like a dire situation, like here, like it goes down, and maybe I maybe posted some quick analysis of a print screen on the stock tweets or Twitter, and saying it's stage 4. But always use risk and money management, and always try to find excuses not to enter a trade. And at the end of the day, after that, well, you have to pull the trigger to learn, to do, to get the feel of those trades. And always protect yourself, guys, with risk and money management. What happened after that? Okay, turned over. Breaking out on crazy volume. Look at that candle right here. So after a small consolidation period, that's not a lot of time, guys. Remember, on the monthly, 1, 2, 3, 4, 5 months bottom, and now right here hogging the Ichimoku cloud defined. So this is how I see it now, guys, on the weekly. Breakout, sideways move, maybe give it some time for the and I'm starting to like less and less playing trades that are far off, because that's the double-edged sword of breakouts, right? You want to play breakout because you have the momentum, you have the volume. But if the breakout happens and it just by nature that candle usually is going to be far away from the 30-week moving average. I see we didn't have even here. It's not even a stand confirmed breakout, guys, because 30-week moving average is still declining. So you're still in the cloud, still declining. You're not overperforming the SPX barely here. So even if you have that volume, you still have a lot of downward force, guys. All the other elements to help you have that stage really explode and go in your favor, they're not there, guys. And it all adds up. You could see it on the monthly. You know how I was hesitant on the monthly. I didn't like how this was setting up. Lower lows. Dipping down below the 12-month moving average is not signs of what you want to see. You want it to bounce off. Here, it would have been perfect. Sideways move, bounce off the 12-month moving average. Even here would have been a good move to enter. How does it look like on the weekly? Right here. See how beautiful that is? Stage 2 breakout. Sideways move. And right here, good risk to reward ratio here. Could even entered right here, close to 30-week average. And then after that, you could have a breakout. The thing is, you see the nature of it? Breakout, getting far away from the 30-week average. So playing pullbacks on low contracting volume close to the breakout lines gives you better risk to reward than playing the breakout. Because if you enter right here, you're far away, and you could easily have a pullback that's going to bring the price action. And there usually is within 1 to 3 months. You have a pullback that's going to bring it all the way back to the breakout line. And that could wear on you emotionally. And if you micromanage your trades and you don't believe in your system, then you're going to start asking yourself questions, and you're going to probably sell or bail when it gets close to here. And then after that, when you see the price action go back up, then you're going to just want to kick yourself. So it brings you in a whole bunch of trouble. Playing pullbacks on low volume is pretty cool because you can enter close to that 30-week average, put yourself stop below the pattern, and you could go with the philosophy that a good trade, a good company should not close below 30-week average. You want to get out, and then you could play out of that for a better risk to reward. Ooh, okay, let's move on. So right now we're not quite there yet. So I think this has to marinate just a little bit more. I could even make a case that it's breaking down this week if I really want to be severe here. This weekly defined support. And hopefully the price action, how I could imagine it. And when it bounces here on the 30-week moving average, then explode up. Look, that's it for me for Walmart, guys. It's not a clear cut one. It's good to touch base with Walmart, but it's not a friendly stage analysis thought, guys. Let's keep an eye on it right now. Stage 3, potential stage 2 continuation, or else it could easily break down, and then we're just going to keep an eye on that. All right, guys. Thanks for listening. Ciao.